Hey guys, welcome back to my channel, and in today's training video we're going to talk about the micro E-minis and how this would be the best place for beginners to start day trading. So stay right there.
Hello traders, it's Samurai Trader here. Welcome to this training session. It's really an exciting session for me because one of the challenges that I've had in training futures traders over the years is the account size that they've really required to start trading the futures market. So I've needed realistically 3.5 to 5,000 or even more to safely trade the futures markets. However, last week the CME released 4 new micro E-mini futures contracts, and it's really exciting because in the first week, as you're about to see, the volumes far exceeded what they expected to see happen, and it's just been a huge take up globally of these contracts. What does it mean to you? Well, as a trader now, you can get started as a futures trader with as little as, with one broker I saw, $355. Typically you probably need around $600 to $700, but where previously you may have needed to say start trading micro forex contracts or mini forex contracts, you can now participate and trade the futures markets, which is really, in my opinion, the fairest market in the world. With most brokers, you don't have any market makers, any dealing desks. You're dealing directly with the exchange. So the purpose of this video is to give you a fairly good overview. Now, this video is for both my members of the Day Traders Fast Track program. I've got over 5,000 members now, and also the general trading public and those perhaps considering my program. Now, what I'll do today in today's session, I'm going to give you some specifications of it. We'll look at some charts and just give you a good overview. And for my members, we're going to do some live trading on my live account over the next coming days. Now, there are some drawbacks with it which I'm going to explain, so I'm going to give you a really balanced overview of the contracts. However, if trading has been tough for you up to now, or if you've perhaps blown your account a number of times, or if you're a brand new trader, this is fantastic for you because it's a great way of having very little risk at the same time trading a real account. Traders, we all know there's a massive difference between trading using a simulator and trading using real money. So your process would be, for an example, if you were one of my members, you would master the setups, of course, on the simulator. Then you would move to these new micro accounts. Then once you've got everything down pat on micro, you can then go to a standard account. You see, starting with only as little as $400 to $600 compared to $4,000 to $5,000, if you have a loss, it might be, say, $2.50, $5. Massive difference. It's, you know, it's a 10% difference, as you're about to see. So well, let's get underway and I'll explain this. I'm jumping ahead. You can probably see I'm excited, traders, and as always, my videos are raw, real, and unedited. So if I fluff up on anything, you'll have to just forgive me. So this is you can actually visit the CME website and you can register to receive their email newsletters, etc. So launching May 2019, they've actually launched. So I'll be really talking about some of the factual things that have happened in the last week. So as I do get underway, I do need to put up the risk disclaimer. There is a risk in trading. You don't trade with the rent money. If you're a new member of mine, or if you're watching my videos for the first time, please pause the video and read the risk disclaimer. There is a risk in trading. You don't trade with the rent money, and you make sure you master the trades in sim, then on the micros before going to a large contract. Okay, so let's talk about these new E-mini contracts and what they mean to you. So there are 4 markets they've bought these out on. The E-mini S&P, which, as we know, massive volume on a daily basis, typically around 1.5 million contracts. We've then got the E-mini NASDAQ, we've got the E-mini Russell, and we've got the Dow. So with these, the ES here is normally $50 a point, and there's if you're $50 a point, there's 4 ticks to a point. 12.50. You got the Nasdaq, which is $20 a point. There's 4 ticks, $5 each. There's the Russell, okay, which is $5, and we then have the YM, which is $5 as well. Sorry, you got to keep thinking. I don't actively trade the Russell or the YM because of volume. However, we've got a lot of members that do. Now, with the new tick values, we've then got here, it's $5 a point on the ES. On the Russell, it's $5. Then we've got the Nasdaq is $2, and on the Russell, sorry, on the YM, it's 50. Let me get these right. Okay, so if we look at the tick value, it's 10% of the value. So if we look at the ES, where normally it's $50, now with the minis it's $5, it's $1.25 a tick. So what that means to your traders, if say you have a 6 tick risk normally, that would be $75, where now with the micros trading the exact same setup on this new micro account, it's only $7.50. So if you have a loss, it's only $7.50. Now there's some commissions on that as well, brings it up slightly, and you'll see some disadvantages long term on your commissions. I mean, it's not all gravy. Okay, there are a couple of drawbacks with these, but overall, in cutting your teeth, in mastering the art of day trading, this is exciting stuff. And we're going to be looking at the charts on these as well. So we then got the Russell. So I have to say, on volume, my favorites are this. After 1 week, you've got the S&P, then you've got the Nasdaq, then we've got the YM, then we've got the Russell, and we'll look at the volume charts in a moment. So where this is fantastic for really 3 types of traders. The trader that's brand new, never traded before, you would still start out by using the simulator. Okay, then you go to the micros, then you go to a full contract. Then you've got the trader that's perhaps been really struggling. Okay, struggling getting the trading right. Stop trading the big contracts. Let's get you back to the basics, trading the micro, build your confidence and build from there. Let's remember, traders, that confidence is like a muscle. The more often you exercise it, just like discipline, the more often you exercise that, the stronger it becomes. Likewise with all of the key fundamentals of trading, we've got to remember that we've got to carry them out on a regular basis. So start out on the micros and build. And the third type of person is a trader that perhaps has blown their account 2 or 3 times. We need to, and believe it or not, I get a lot of clients that join me, a lot of traders that join me that are still losing money. You totally stop live trading your account, you go back to the sim, we then get you on the micros. Now if we take a standard contract, okay, the maximum risk you ever want to have as a day trader is 2%. Okay, so if you're say trading the Nasdaq, and normally you've got a 20 tick risk, which is $100, okay, you need a $5,000 account. If you say trading the ES with a 6 tick risk, which is $75, you'd need a minimum account size of $3,750, okay, to stay within that 2% risk. Now with a micro, with 20 ticks, it's only $10 at 50 cents a tick. We look at the same 6 ticks, same here, it's only $7.50. You only need $350, okay, at $1.25. Now yes, I know that your returns are going to be nowhere near as much as say at $12.50 a tick. It's only $1.25, but this is about building your skill set, your discipline, your patience, and your overall skills. Once you master your trading on the micros, you can then go to a large account. And as many of you know, even if you came to me and said, look, I've got 50,000 to start trading with right now, I would say go and invest 45,000. You haven't earned the right to say be trading 10 lots. You've got to earn your stripes, traders. If you start out and say, okay, I'm going to double my account, that is, start with in sim, go to the micros, then go to a standard lot, go from 5,000 to 10,000 in your account. You start trading 3 contracts, get to 15. Sorry, you start trading 2, get to 15. You start trading 3. You build your trading career that way. I promise you, you'll be a long-term trader. There are no shortcuts as far as risk management goes and learning the principles of day and swing trading. Now, if we look at this table here, and this was kindly supplied by one of my full-time traders, Denzel, we can see here the tick value and what you normally require, and this is with TradeStation. Okay, there's a lot of excellent US based brokers, and look, the big thing with brokers, by the way, is the commissions you pay. Of course, are they regulated? If you look at the UK brokers, USA, the Australian brokers, they're the most regulated in the world. But the bottom line is your initial margins you require here. So the ES is up around 7,000, gold GC around nearly 4, Nasdaq's 8. So you can see the margins. Now then you have the day trading margins, which I won't get into today, but let's remember, traders, with day trading margins you still have to remember your 2% rule. But let's now have a look at this here. With the micro contracts, we can see these are the TradeStation figures here, the margin 693, 391, 836, 691. So we can see the total margin for these micros is basically 10%. So you can now start trading with a lot less money in your account. Now I will say this, some brokers still require that you open your account with $2,000 to $5,000, so you just need to check with that. Okay, I'm totally broker neutral. Okay, but so some of the great brokers that I know of are AMPS in the US. You've got NinjaTrader, of course. You've got of course TradeStation. So you want to check with your individual broker what is the, if you haven't opened an account with them so far, what the minimum amount is. If you go to AMPS, look at AMPS here, the maintenance margin, and basically 600, 760, 355 there for the Russell. So just very, very low account requirements are required initially. Now we have to remember, and this is the drawback with the micros, is the commissions. From a percentage basis, they are at least 30 to 50% more overall. So on a proportionate basis, if you were to say trade one standard lot, okay, so if you were to trade one standard lot with say TradeStation, you're going to, on say the ES, you're going to pay around round turn, that is in and out, a total of $4.80 thereabouts. Now it works out to be that with the minis, approximately, this is approximately, you would need to be trading 10 minis to be doing the same. So it's going to work out you're going to pay around $8 compared to the $4.80. So it's a fair bit more, traders, that you're going to be paying. If you got up to trading 20 contracts, you're going to be paying upwards of $16. Okay, so you're going to pay to be effectively trading 2 standard lots, where you'd be $9, what's that, $9.40, is that correct? Somewhere around that, $9.20, whatever it works out to be. So effectively it becomes much more cost effective longer term, of course, to be trading the larger contracts. However, in your early days, in trading one contract, 2, 3, and starting to mastering the art of day trading, that is by you start by trading one contract, you get it down pat, you start trading 2, taking one contract off at a fixed profit and trailing your second. So as you master the art and as you learn the techniques, you scalp one contract and you trail your second. Then you might go to 4 contracts, okay, on the micros, where you scalp 2 and you let 2 trail. There's a whole lot of different techniques. So the major benefit here is it's allowing you to master the art of trading with a lot less risk, and that's really important from a psychological point of view. Now let's talk volumes for a moment. When it first launched, now I do have to say, and this is May 2000. I know for my US friends, where most of my members are from, of course you have it round the other way. We did have a very high volume of trades last week, particularly with earnings reports. We then of course had the Apple report come out. We've also got the China crisis, or what I want to call it crisis, but the China trade talks at the moment, which is affecting the market. So we have seen above average volumes. But putting that aside, we're normally, last Monday we'd normally see around 1.4 1.5 contracts. We saw just under 2 mil. But this is where it's interesting. Down here on the ES mini micro account, my apologies, micro, it did 156,000 contracts. Now from my research, I believe that the CME was hoping to be able to do 100,000 contracts within the next month or two, and they did 156,000 contracts on day one. This is spectacular. Then on the NQ they did 90,000 for the day. We had the Russell 33,000 and the Dow 24,000. Now the next day we saw 254,000 contracts, 174, 60,000 on the Dow. There was 16,000. Next day, I'm just going to show you 5 days, 245,000 again. Now, in my opinion, and up here you can see the ES did 2.7 million, where normally it's 1.5. So if you break that down, it's still the equivalent of probably a good 140, 150,000 contracts a day. You see, to make any market tradable, traders, what we require, we need, of course, a market that has a good trading range. All right, we want to see those waves. We're surfers, remember. We want to see momentum, and we also need a good trading volume. And when I go to the charts in a moment, you'll see, and I'm recording this during the Drawbacks session, that it's very spotty at the moment on a couple. However, on the ES is still some good trading opportunities. And just the last day here, we saw on Friday a massive 2.7 million contracts traded, and down here 395,000. Now in proportion, we're seeing the volumes of the micros is increasing almost every day. But the real key point here is with these micros, if you're a struggling trader, if you're a brand new trader, what a great spot to start. You don't have to start now with $5,000. You know, what if you only have 1,000? You can start by trading the micro ES. Build your account over 6 months. You've built your confidence, built your trading skills, then you can jump up to a large account. And it's amazing when you've got a goal in mind of how much quicker you can save and build that up, particularly when you see you're getting great success on the micros. So traders, hopefully this is giving you just a good quick overview, but seriously, these micros are a massive move forward for traders all around the world that may be initially a little cash strapped, or that are brand new to trading or struggling. You know, this is a game changer.